Hello everyone and welcome to today's lecture. So today what we are going to do is we're going to cover the rest of SA 200 series with the practical side. Okay. The last lecture we discussed a lot of questions. We discussed a lot of MCQs, past questions with respect to SA 200 series. And before that we covered the peer and quality review chapter. Now again I will be reiterating that our target this time is to focus on the practicals, to focus on the question solving, to focus on how to attempt an answer that will help you in exam rather than going back to the theory. For the theory, you need to refer to the already existing lectures which are there on the BOS portal. Okay. And you need to be prepared for the session because in this session and in the coming sessions, we'll be discussing more on the question side. Okay, I will be expecting answers from your side. And as a result, you need to be prepared with the lectures, the study material you need to read before the lecture, and you need to be, clear with the concepts. If you have any doubt with respect to any of the concept, any of the question, any of the, area, you can ask here. You can ask even, drop a mail also. But be ready with your questions also so that you can get it clear in the lecture. Okay, so before I start the lecture, you can ask any of your doubts if you have. I will be covering the SA 200 series just to give you a glimpse. We have already covered SA 200, which talks about overall objective of independent auditor. We have covered certain questions of that. Then we covered about SA 210 with respect to the agreeing the terms of audit engagement. We also covered the past questions related to that. Okay. Then we covered SA 220 with respect to the quality control. We covered SA 230. Now today, the target will be SA 240, 250, 60, 65, 99. Okay. Okay. So let's start. Before I move to SA 240 and to the rest of the essays, I have one good question on SA 220. Okay, let's cover that first, and then we can jump into the rest of the essay. Okay. The question is that Manpreet Aerotech Limited management contacted Ashok and Company to appoint them as a statutory auditor for the company. Before the appointment, Mr. Krunal, the new engagement manager, reached out to Mr. Alok, engagement partner, to understand the firm's requirement regarding the compliance with independence requirement. Mr. Alok explained to Mr. Krunal that the engagement manager should form a conclusion on the compliance with independence requirement that apply after accepting the audit engagement. Okay. So, what Mr. Alok explained that he should form in conclusion compliance with the independence requirement that that apply after accepting the audit engagement. Okay. So that is the scene here that whether the question is that whether the independence requirement with respect to SA 220 is applicable before accepting the audit engagement or after accepting the audit engagement. Come on, guys. So with respect to SA 220, okay, now the independence requirement is applicable after accepting the audit engagement or before accepting the audit engagement? A question for you guys. Come on, guys. Okay, good, Kaushiki. Correct, Janvi. Good morning, Viraj, Sriram, Namrata. Okay, let us see the answer here. Okay, see, when I talk about independence requirement, they are not at a point in time before or after. They are required to be looked into on a continuous basis. It's not like that you need to have on one point in time, okay, before starting the audit, I was independent, fine. You need to be independent throughout the audit, okay, throughout your engagement. So it's not at one point in time, basically. Let's say SA 220 for quality control for an audit of financial statement, the engagement partnership takes the overall responsibility for each of the audit engagement. Now here, Mr. Alok was the engagement partner, but he explained to Mr. Kunal that engagement manager should form a conclusion. You see, he explained that engagement manager should form a conclusion, but in actual, the responsibility lies with the engagement partner. Okay. Second, to which the partner is assigned, the engagement partner shall form a conclusion on compliance with independence requirement that apply to audit engagement. And that's why it's not after or before, it's throughout the audit engagement. So form a conclusion on compliance with independence requirement that apply to an audit engagement throughout the audit means. Correct, Srinam. And with regards to that, what he needs to do is he needs to obtain relevant information from the firm, like to identify is there any threat to independence. He need to evaluate that information, or he need to evaluate the identify breaches over the independence which may result into threat. He needs to take an appropriate action to eliminate such threat, okay, or reduce such threat to an acceptable level by applying safeguards. If he can do so, then he can address the threat on the independence. If it is not possible to address it, then if considered appropriate, he can also withdraw from the audit engagement, okay, if it is permitted by the law. The engagement partner is required to identify threat to independence regarding the audit engagement, okay, and he needs to eliminate and reduce it to an acceptable level, okay, and where it is not possible to reduce at an acceptable level, then he needs to, if permitted by law, okay, then he needs to withdraw from the audit engagement. Clear? Any doubt? Any doubt? Okay. So there is one doubt. In what cases withdrawal from the engagement is permitted by law? See, when you will go through Companies Act, okay, or Companies Audit, so there are some guidelines with respect to the withdrawal from an engagement in case of listed entities. the guidelines were issued by the SEBI. There was a circular on the resignation by the statutory auditor. So you cannot withdraw from the engagement until and unless there are certain conditions satisfied. So in that case, law prohibits withdrawal from the engagement. So subject to that, you can withdraw. But when there is a prohibition under the law, when there is specific requirement that you need to deliver the engagement, you need to complete the engagement. At that point in time, it becomes difficult to withdraw from the engagement. Acceptable level. Okay, what we mean by acceptable level? See, acceptable level is a level at which when you identify a threat, okay, and you bring down to that particular level, that is acceptable level, then at that point the threat no longer can impact your engagement, your independence, okay, or whatever way it is impacting you, it will not impact it. So bringing down to an acceptable level means bringing down to such level that threat no longer will impact you or will impact your independence. Any doubt? Any doubt? Okay. Now, there is one more good question on SQC1, which is related to SA 220 also on the same line. So I'll discuss that also. Dhananjay and Associates, a firm of chartered accountants, has been operating for last 20 years and having its office at multiple locations across India. The firm has a staff of around 100 persons with 12 partners. Okay. The firm has been offering assurance and advisory service and tax advisory service to its various clients. The primary work of the firm is a tax advisory. The audit partners discussed within the firm that the firm needs to work significantly to improve the quality of the service they offer, which would also help them, the firm, grow its business. Considering the objective, the firm started mandatory training program for the staff. During one such training program on the quality control for audit, Mr. Meath, one of the audit manager, inquired regarding the information that the firm should obtain for accepting an engagement with the client or when deciding whether to continue. When considering the acceptance of a new engagement with the existing client. Okay. Kindly guide Mr. Meath with respect to the information that assists the engagement partner in determining whether the conclusion reached regarding the acceptance and continuance of the client relationship and audit engagement are appropriate or not. Okay. So you need to guide Mr. Meath with respect to the information that assists the engagement partner in determining whether the conclusions reached regarding the acceptance, continuance of the client relationship and the audit engagement are appropriate or not. So what are the information that you will be looking, okay, as an engagement partner, okay, to determine whether the acceptance and continuance decision that you have taken or the conclusion which have arrived, whether you want to continue or accept the client relationship or audit engagement is correct or not. So what information you will look for? Let's say, for example, what information I will go and ask from the client or gather throughout the from the engagement or from other sources to understand whether I should continue this engagement or whether I should accept this audit engagement or not. And that will help me in reaching in determining whether the conclusion reached of acceptance or continuance is correct or not, or is appropriate or not. Correct, Namrata? Good. Think of you being in engagement partner's place. What information you will look for? That okay, now I need this information to understand whether I should accept this client engagement or not. Absolutely correct, Charvi. I'm waiting for more answers. I'm waiting for more answers. What information you will be looking when you want to accept or continue a client relationship before start of the audit? Okay, let us see the answer. Generally, the requirement is there in the SQC1. Okay. So what SQC1 says in this area with the respect to the client acceptance continuance? SQC1 requires the firm to obtain information considered necessary in circumstances before accepting an engagement with new client. Okay. Now, there are certain things that the auditor or the engagement partner should look into, or should gather to determine whether the conclusion reached are appropriate or not, and that includes integrity of the principal owners, key management, and those charged with governance of the entity, whether the engagement team is competent to perform the audit engagement and has necessary capabilities, including time and resource, whether the firm and the engagement team can comply with the relevant ethical requirements, and any significant matters that have arisen during the current or previous audit engagement, their implications on the continuing relationship. These are the four areas. One, integrity of the principal owners. Why? Reason because to understand whether the principal owners, key management, and those charged with governance, how much integrity they have, and because it helps you to take your decision making in your risk assessment and to to look into if there are chances of any fraud or not. Second, whether the engagement team is competent to perform the audit engagement. Now, why we are looking to the engagement team? Reason because at times there could be a scenario that okay, the engagement team might not have necessary capabilities or skills required to deliver the audit. Let's say, for example, you have been entrusted with the audit of a listed company which is having turnover in let's say 1,000 crores or lakh and crores, like this way. but you don't have enough resource or the team size to perform the audit or to cater the audit, or some of the transactions require some special skills, might require some special valuation skills or some technical skills analysis, not from the accounting side but from the understanding of business side. Let's say, for example, you are doing the audit of petrol and oil. Okay, at that particular point in time, it becomes very difficult to measure the inventory. There is an inventory, how much is there, okay, because at each and every temperature level, with a change in even 1 degree, the inventory level will change. Okay, so that's why it might happen that in that case you might miss the necessary capabilities or skills required to deliver the order. So to understand the engagement team is competent or not is very important. Third, whether the firm and the engagement team can comply with the relevant ethical requirements. Now, complying with the relevant ethical requirements will include everything, the code of ethics, which will include all the fundamental principles that I need to comply with, all the requirements I need to comply with, everything is included. So it talks about you need to evaluate whether there is any threat, whether there is any situation present because of which you won't be able to comply. And fourth, significant matters that have arisen during the current or previous year audit. Why? Because that will guide you whether you should accept the audit engagement or not. So significant matters can be, why the audit was qualified or adverse opinion was issued. Why is there any uncorrected misstatement which could have a major impact on the current year's financial statement, or you can say there could be chances that okay, because the previous auditor issued adverse opinion, the auditor was changed. So a lot of things can be there. So you need to understand significant matters that were there in the audit engagement and their implications on the for the continuing the relationship. Clear? Any doubt? Okay. Let us see the next one. So it's in continuation of that only. In continuation to the above question, Mr. Jay, one of the audit managers, inquired about the responsibilities of the engagement partner with respect to assignment of engagement teams. Now, Mr. Anurag, one of the trainers, explained to Mr. Jay that the engagement partner shall be satisfied that the management or any of their experts who are not part of the management collectively have the appropriate competency and capabilities to support the audit engagement. Okay. So, what he told is that he shall be satisfied that the management and any of their experts who are not part of management collectively have the appropriate competency and capability to support the audit engagement. Now, however, there were certain trainers and participants were not satisfied with the explanation provided by Mr. Anurag. Okay, so they were not satisfied. Kindly select the appropriate option from below to clarify the responsibilities of the engagement partner with respect to assignment of engagement teams. So what are the options? Option number 1, the engagement partner is not required to verify whether the engagement team and any auditor expert who are not part of the engagement team collectively have the appropriate competency and capability to perform the audit. The engagement partner shall be satisfied that the engagement team shall have the appropriate competency and capability to perform the audit engagement. However, he is not required to verify the same for any auditors expert who are not part of the engagement team. The engagement partner shall be satisfied that the engagement team, any auditor expert who are not part of the engagement team, collectively have the appropriate competence and capabilities to perform the audit engagement. And fourth, engagement partner shall be satisfied that the management and any of their experts who are not part of the management collectively have the appropriate competency and capability to support the audit engagement. So what is the correct option? So what is the correct option? Okay, good journey. Okay, good Shri Ram. We just now discussed this thing, so it's related to the previous question, I would say. It's related to the previous question only. It's related to the previous question. Correct, Namrata? So, and after this, I'll explain you, Namrata, your questions on integrity and the engagement team. Come on, guys. Okay, let us see. Now, the first option. Okay. And before I move to the options, let's understand the question. So, Mr. Anurag, one of the trainer, explained to Jay that engagement partners shall be satisfied that the management and any of their experts who are not part of management should have the appropriate competency and capabilities. And with respect, this is with respect to the assignment of engagement teams. Now, understand one thing. When I talk about engagement partner, okay, what he is required to do is he is required to understand whether the engagement team is competent to perform the audit engagement or not, whether they have the necessary skills and resources, not the management. Okay, so management, whether they have the appropriate capabilities and competencies to support the audit engagement, it's not relevant for me. So let's just see the options here. The first option, that the engagement partner is not required to verify. Okay. is not required to verify, and that is not appropriate. Engagement partner is required to verify. So that is incorrect. Then the next is engagement partner shall be satisfied that the audit engagement team shall have the appropriate competencies and capabilities. However, he is not required to verify any auditor expert. Okay. It could be an answer. So I'll just as of now, I circle it. Third, the engagement partner shall be satisfied that the engagement team and any auditor expert who are not part of the engagement team. So here is only engagement team, audit engagement team. Here it is engagement team plus auditors expert. So that's the difference between B and C. Okay. Then D, that engagement partner shall be satisfied that the management and their expert. So that is also incorrect, because we are not required to look for the management whether they have competency or capability to support the audit or not. So that is correct. So A and D are incorrect. Now you tell me whether I am required to look onto the auditor's expert competency or capability or not. So accordingly, I will say B or C. Am I required to look into the competency of auditor's expert? Am I required to look into? Okay, good, Shriram. So my question is, am I required to look for the competency and capability to perform the audit engagement of the auditor's expert, or I am just fine with the engagement team? I'm waiting for your answer. Yes, auditors expert mean expert appointed by audit engagement team. Good, Namrata. So yes, answer is we are required to look into. Yes, it's not like that we are not required to. We are required to look into, and it's not only the requirement that is present in the SQC1 or SA220. If you look to the one more essay is there which talks about this having the work done by the auditor's expert. Which essay is that? Come on, guys. Which essay is that which talks about the work? Which essay talks about the work that is performed by auditor's expert? Come on. Which essay talks about the work performed by an audited expert? Correct. Essay 620 talks about using the work of an auditor expert Okay. Now, if you go through that particular essay, in that essay there is a requirement. Okay, even that essay also contains the requirement that I need to understand. Okay, uh, whether the competency, capability, and objectivity of the auditor expert. So, as a part of that essay, there is a requirement that the auditor is required to evaluate whether the auditor expert has the necessary capability, competency, capabilities, and objectivity. Okay, for the auditor's purpose, and whether he will be in the position. Okay, he will be in the position, whether he will be in the position to safeguard and to avoid threats that are applicable to us also. So in that case, we are required to look into the auditor's expert competency and capabilities also, and hence B will be incorrect and C will be correct. Any doubt? Correct, Sriram. So there was a question, what will include in the engagement team? So all the engagement team members, audit team members, your staff, article trainees, then engagement partner, then any of the expert appointed by the audit engagement team. So all these will become part of your engagement team. Okay. Any doubt? Any doubt? Okay. If no doubts, then I would like to start the essay 240. And before I start an essay 240, let me provide you some background on that essay. Okay. Like what is essay 240 and what it covers. Just a quick summary so that we can then jump on to the questions and we can take it forward. Now, essay 240 basically talks about, you can say, auditor's responsibility with respect to fraud. Okay, in an audit of financial statement. Now, this essay basically, extends the application of essay 315 and 330 in case of a fraud risk. So it talks about how to apply essay 315 and 330 with respect to the fraud in a summary. Okay. Now, if I talk about this particular essay, okay, so the objective of the auditor under this particular standard is to identify and assess the risk of material misstatement due to fraud. He is required to obtain evidence about the assessed risk of material misstatement, and he needs to then respond appropriately to the identified and suspected fraud. So, three things. The objective of the auditor is three. One, identify the risk of material misstatement due to fraud, obtain evidence, and respond appropriately. Okay. Then there are other requirements of this particular essay which requires you to maintain professional skepticism, understanding the business and its environment. The auditor is required to identify the risk of material misstatement at the assertion level. There are these other requirements in this essay which the auditor is required to fulfill. Then yeah. So auditor shall identify the risk of a misstatement due to fraud and error at the assertion level. Okay. Now there are two areas where there is a presumed risk of fraud. One, presumed risk of fraud in revenue recognition, and second, there is a presumed risk of fraud in management override of controls. So these are the two areas where there is a presumed risk of fraud. Means we presume that the risk of fraud is already present. Okay, and the risk of material misstatement due to fraud should be treated as a significant risk. And auditor is required to evaluate the processes and controls or controls which are addressing those risks accordingly. Okay. Auditor is required to perform an inquiry with the management and those charged with governance with respect to understanding their process of identification of risk of material misstatement. Okay, how management respond to identified risk of material misstatement. If they have identified any unusual relationship or any transaction which indicates toward the risk of material misstatement due to fraud. Okay, auditor is required to evaluate the fraud risk factors. Okay, which are the fraud risk factors? Three fraud risk factors. Remember? Which are three fraud risk factors? Which are the fraud risk factors? Come on, guys. Pretty easy. Which are the fraud risk factors? You have seen, you have already studied this fraud risk factor at the various places, I could say. So the fraud risk factors, absolutely correct, Namrata. Sriram teaming and leading is an example of the fraud scheme. So the fraud risk factors are classified as an incentive or a pressure to commit the fraud, a perceived opportunity to commit the fraud, and an ability to rationalize the fraudulent action. These are the three fraud risk factors. So basically, these are the three categories or conditions that generally are present with respect to the fraud whenever there is a high chance of fraud. And under each of the category, there are some factors. Like for example, if I talk about incentive and pressure, so there could be a lot of scenarios which could generate or result into the incentive or pressure. Let's say, for example, if I talk about pressure, means companies incurring huge losses. Okay, and to show and to let's say companies incurring huge losses, and their bonuses are linked to the profit of the company at the year end. So to convert from loss to profit so that they can get the bonus, that's in pressure. Okay, another way now. Let's say their sales commission is depend upon the sales that is made by the each agent, sales agent. Now there is an incentive that if he'll make more sales, then he'll get more commission. Okay, as a result, so that's an incentive to do something wrong. Same way, opportunities. How I can say there is a fraud risk factor with respect to opportunities? When the controls are weak, there is no oversight, there is no appropriate policies. So there is an opportunity they can do something wrong. And as you said, rationalization is something to rationalize a particular act. Let's say, for example, known history of violation, the management itself, is involved into such kind of practices, or it's management usually looks into these areas. A lot of things are there to rationalize a particular activity. So these are the fraud risk factors. Again, Sriram, fraudulent financial reporting and misappropriation of assets. Again, they are the categories of fraud. Okay. Then management communication to their employees. You need to understand what is the management communication to their employees regarding ethics. Ask internal audit function about their assessment on findings. Okay. Ask those charged with governments how they are performing oversight. Respond to assess risk of fraud risk of material misstatement due to fraud. Once you have identified, so these two areas will help you to identify, that is application of SA 315. Identification of risk of material misstatement due to fraud and error. But when I talk about response to assess risk, it goes to SA 330. Application of SA 330. How you can respond to a assess risk of material misstatement due to fraud and error. Then what you need to do is to respond, you need to understand or evaluate the accounting policies. Okay. You need to see, you need to perform unpredictability testing. You need to, assign and supervise the task of your engagement teams, and you need to assign responsibilities in such a way that, the engagement team is able to perform. At assertion level, you need to design the audit procedure to address the risk of material misstatement due to fraud. Then there comes the second area is fraud risk factor due to management override of control. I told you there are two areas: presumed risk, one with related to the revenue recognition, second with relate to the management override of control. That is a default fraud risk and significant risk. Irrespective of auditor's assessment, auditor is required to test manual journal entry. They are required to inquire with the financial reporting team. Okay. About any unusual journal entry, they are required to test estimates for the management bias. Audit team is required to test management decision, and audit team is also required to test non-recurring transaction irrespective of the auditor's assessment to this risk. Auditor is required to perform analytical procedures to determine any area or evidence that might, point out towards any fraud or suspected, fraud. If you are not able to continue, then discuss with the management, discuss with those charged with governance, and if possible, you can also consider withdrawing from the engagement. So that was the background about SA 240. So the question is, can management override the control? Answer is yes. Management are in the position to override the control. Let's say, for example, a particular journal entry requires an approval from a manager. But what if the CFO asked one of his, executive to post a journal entry? So they are in the position to, influence and, to create an exception for them. So they can override the control through the exceptions. Clear? Now let's look at one of the questions. It's from the past question. Okay, it has been there for the 5 marks. Messrs. Kumar and Company were appointed statutory auditor of PC Limited for the financial year 2021. During the course of audit, one of the partners, CA Kumar, observed that there is a misappropriation of asset in the form of theft of the entity's inventory and is perpetrated by the employees in relatively small and immaterial amounts. CA Kumar is concerned with the existence of certain circumstances for increasing the susceptibility of the asset to misappropriation. Guide CA Kumar with respect to the risk factors related to misstatement arising from the misappropriation of asset with reference to relevant relevant standards on auditing. So you need to guide Mr. Kumar with respect to risk factors related to misstatement arising from misappropriation of assets. What could be the risk factor here? What could be the risk factor? Just now we discussed. What could be the risk factor here? And which are the fraud risk factors? We just now discussed about the fraud risk factors. Same way, you need to answer this also. Come on, guys. Mansha, that is the particular type of fraudulent activity. Okay, they're the type of frauds, I could say, but in that the fraud risk factors differ. Okay, Namrata. Okay, Janvi. See what is asked in the question. Guide CA Kumar with respect to risk factor related to misstatement arising from misappropriation of assets. So when I talk about risk factors, first of all, you need to understand what is misappropriation of assets. You need to explain that is explained over here. Now, what are the risk factors? Risk factors usually are divided into three categories or based on three conditions: incentive, pressure, opportunities, and rationalization. Now, you need to guide with respect to these three categories what could be the risk factor. Let's say, for example, known or anticipated employee layoffs, recent and or anticipated changes to employee compensation, promotion, compensation, or other rewards inconsistent with the expectations. So these are certain areas which could create incentive or pressure for the employees. Opportunity is something like there is a area, or you can say gaps in the controls which allows to do misappropriation of asset. Okay, inventory items that are small or in size, of high value or in high demand, large amount of cash on hand or processed, easily convertible assets, fixed assets which are small in size, marketable, lacking observable identification of ownership. Okay, inadequate segregation of duties, inadequate oversight. Then if I talk about, there are a lot many. If I talk about rationalization, then disregard for the internal controls, disregard for the need of monitoring, tolerance or petty theft, change in behavior or lifestyle. Okay, behavior indicating displeasure or dissatisfaction with the entity, So there are certain factors which helps you to which helps a fraudster to rationalize that. So these are certain factors, risk factors, basically. And in question, it is asked about misappropriation of assets, not only the inventory but assets. So I'm looking from the whole asset point of view, not just related to the inventory. Although in question above you have the discussion of the inventory, but it is asked for the whole of the assets. Are you clear? Any doubts? Any doubts? Any doubts, guys? No? Okay. Let's move forward. There is one more question that was there in the past exam. Okay, let us see. In the course of audit of Quick Limited, you suspect that the management has made misstatement in the financial statement intentionally to deceive the user and to succumb to pressure to meet the market expectations. Elucidate how the fraudulent financial reporting may be accomplished and also discuss the techniques of committing the fraud by the management override of controls. How management can, conduct a fraudulent financial reporting. Okay, so you need to provide how the fraudulent financial reporting may be accomplished. Second, techniques of committing fraud by management override of controls. So you need to provide these two things. Let's focus on first fraudulent financial reporting. How management can do fraudulent financial reporting? Come on, guys. How management can do fraudulent financial reporting? Namrata, to your question, can a person who is employee of the firm be an engagement partner? Answer is no, usually no. Because engagement partners are those ones who sign the audit engagement. Okay, they sign the audit report, and an employee cannot sign an audit report. So, guys, waiting for your answer, you need to provide how the fraudulent financial reporting can be accomplished by the management. What management can do to conduct a fraudulent financial reporting? Some examples I'm asking. Correct, Janvi. Absolutely correct. Very pretty simple. The answer is pretty simple. Trust me. Correct, Namrita. Come on, guys. Now, how can I do fraudulent financial reporting? Simple. Or what management can do? What management can do? See, when I talk about fraudulent financial reporting, it's related to financial reporting. Okay. Now, if you see the financial reporting process, what it includes: journal entries, financial statement closure entries, okay, accounting estimates. And if I want to do a fraudulent financial reporting, I'll do a fraud in these areas. Simple. So let us see the answer. SA 240 discussed how a fraudulent financial reporting can be accomplished. Okay, by giving some examples. And those examples are manipulation, falsification, or alteration of accounting records, supporting documents from which the financial statement are prepared, misrepresentation or intentional omission from the financial statement, events of transaction of significant information, intention misapplication of accounting principles relating to amount, classification, manner of presentation, or disclosure. So if you do this intentional manipulation, misapplication, misrepresentation, okay, then in that case, that will become your fraudulent financial reporting. Now, the second is also discuss the techniques of committing fraud by management override of control. You need to discuss the techniques of committing fraud by management override of control. How management can override the control. Some examples. Some examples with respect to the management override of control. Correct, Namrata? It's on the same line. If you see, it's on the same line. So fraud can be committed by management overriding controls by using techniques as recording fictitious journal entries, or manipulate operating results to achieve other objectives, inappropriately adjusting assumptions, changing judgments, omitting, advancing, delaying in recognition of the financial statements of events, okay, or transactions that have occurred during the reporting period. So these are certain examples of management override of controls. Correct, Srinam. Absolutely correct. This is not an exhaustive list. These are some 2 or 3 examples. That's it. There can be more examples. Any doubt? Correct, Namrata. That could be the scenario. Okay. Let us see one more question. Arient Limited was engaged in the business of owning and managing hotels and resorts, selling tourism package, and performing the airline bookings for corporate and individuals. It appointed Upadhyay and Company as its statutory auditor for the financial year 21-22. While planning the audit team decided that the risk of improper revenue recognition from the hotel business should not be treated as a fraud risk. The conclusion was based on the assessment of earlier years, wherein no fraud was identified or in revenue recorded from the such business. While testing the internal financial controls over financial reporting process over the process of revenue recognition, it was identified that the controls are not properly designed to mitigate the risk. Again, controls are not properly designed to mitigate the risk. As a result, the audit team decided to perform additional substantive testing. However, the audit team still were to conclusion that there is no risk of fraud in revenue recognition. During the course of substantive testing, it was identified that the management did not account for revenue received from the corporate hotel bookings amounting to 35 crore. So there was a non-recording of revenue, or revenue was not recorded or was not accounted amounting to 35 crore. They were partially received in the company's bank account and partially received in the CFO's personal account. The amount received in the bank account of the company were disclosed as advance received against the future bookings. In the light of above scenario, kindly guide the statutory auditors with respect to the responsibility relating to a fraud in a financial statement. Come on, guys. So, in the light of above scenario, whatever we have discussed, that there was an issue in the controls, and what was the missed out, what was the auditor's assessment, you need to guide the statutory auditor with respect to the responsibility relating to a fraud in audit of financial statement. How will you guide? At what places you will guide? Come on, guys. How will you guide? What are the areas or what are the things the auditor should do here? Come on, I'm waiting for the answer. Come on, guys, I'm waiting for the answers. How will you guide the auditor? Okay, good, Janvi. Okay, so in order to guide the auditor, first of all, understand what he has done. Simple. If you want to guide the auditor, you need to understand what he has done. First, what auditor has done? So auditor has reached to a conclusion, okay, that the controls were not properly designed to mitigate the risk. There was a fraud also, but still, they were to the conclusion. The audit team was still to the conclusion that there is no risk of fraud in revenue recognition. Now that is something not appropriate. Okay, because improper revenue recognition is the fraud risk, presumed risk of fraud. But if you do not want to keep it presumed risk of fraud, you need to have the appropriate, evidence in your hand. So let's see the answer. As per SA 240, the auditor's responsibility relating to a fraud in a financial statement, and SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment, the auditor shall identify and assess the risk of material misstatement due to fraud at the financial statement level and at the assertion level from the classes of transaction, account balances, and disclosures. When identifying and assessing the risk of material misstatement due to fraud, the auditor shall, based on a presumption that there is risk of fraud in revenue recognition, evaluate which type of revenue transactions or assertions give rise to such risk. So the audit team here, in the question itself, it is mentioned that while planning the audit team decided that the risk of improper revenue recognition from the hotel business should not be treated as a fraud risk. So, from the hotel business should not be treated as a fraud risk. Now, as I said, the auditor is required to look into fraud risk factors, okay, to understand whether there is a risk of fraud or not. Plus, he needs to understand risk of fraud at each revenue level and at each assertion level for the each revenue. So, for example, the company is operating, managing hotels and resorts. Second is selling tourism packages. So there are two types of revenues. Type 1 revenue, type 2 revenue. I'm not only required to look into at the overall level, but at the type of revenue level. Okay, and then at the assertion level, whether there is a fraud risk for the revenue recognition present or not. Now, if you see the answer, that the presumption that there are risks of fraud in revenue recognition may be rebutted, means it can be decided that the revenue risk of fraud in revenue recognition is not present. For example, the auditor may conclude that there is no risk of material misstatement due to fraud relating to revenue recognition in case where there is a single type of simple revenue transaction. For example, leasehold revenue from single unit rental property. So revenue calculation is pretty simple. You can easily calculate and recalculate, identify the revenue easily. If there is a complex revenue structure or where there is lack of controls on revenue recognition, then there is a high probability of fraud risk in revenue. So here, the controls were not properly designed to mitigate the risk of improper revenue recognition. So there was a deficiency in control. Now, I already identified the deficiency in control. Can I still say there is no risk of fraud in revenue recognition? Answer is no, I cannot. Okay. So, obtaining an understanding of the entity's environment, including entity's internal control, is a continuous and dynamic process of gathering, updating, and analyzing information throughout the audit. In the current scenario, the company was earning revenue from multiple streams. Also, it was identified that the controls are not properly designed to mitigate the risk of fraud. During the year, it was identified that management does not account for the revenue from corporate total booking amounting to 35 crores. Okay. So there was a fraud. Plus, there were controls were not appropriate, and that's why there was a fraud, because that gives the rise to opportunity. There is an incentive available, there is a rationalization available. Now he got the opportunity also. Therefore, while performing the risk assessment procedure, auditor should consider the complexity, nature of the revenue for determining the fraud risk in revenue recognition. Also, there were no adequate control addressing the risk of improper revenue recognition. Okay. Moreover, auditor should recognize fraud risk by identifying the deficiency of the internal control over the revenue recognition process, and should treat it as the risk of improper revenue recognition as a significant risk. Also, as per section 143, subsection 12, the auditor is required to report all frauds identified during the course of audit involving amount of 1 crore within the prescribed limit time frame to the central government. Because the fraud here is of 35 crore, more than 1 crore, I am required to report to the central government under section 143, subsection 12. Clear? So, hence, the auditor assessment of the risk of fraud in revenue recognition is incorrect. Any doubt? Okay. Correct, Sriram. Correct, Namrata. Viraj, partially correct. Yes, we are required to look into the true and fair view of the financial statement, but also we are at the same time to express an opinion. We are required to gather appropriate and sufficient audit evidence, and to do that, we need to first understand the entity. We need to perform the risk assessment, and then we need to design the procedures as a response to those assessed risks. Clear? Any doubt? Any doubt, guys? Okay. If no doubts, then let us take one more question on this. Mr. Manoj, audit manager, was ready to make inquiries of the management and others within the entity as appropriate to determine whether they have knowledge of any actual suspected or alleged fraud affecting the entity. So he was ready to make the inquiries. However, he was not sure who could be included in these inquiries beside the management. So he was not sure who he could include in the inquiries. You need to guide Mr. Manoj with the examples of other within the entity to whom the auditor may make direct inquiries about the existence or suspicion of fraud. So, whom he could reach out or whom he could, conduct the inquiries with other than the management itself, okay, about the existence or suspicions of fraud. Come on, guys. Now, this is pretty much easy. Other than the management, which are the persons or categories of persons I could reach out to in an organization, okay, with whom I can conduct the inquiry, with whom I can conduct the discussions to understand whether there is an existence of fraud or suspicion of fraud other than the management. Come on, guys. Correct, Janvi. Thank you, Viraj. Okay, good, Namrata. Come on, guys. Pretty easy. I just need to identify the persons other than the management within the organizations with whom I can conduct the inquiries. Okay, let us see the answer. Now, while understanding the entity and its environment, and while understanding the risk of material misstatement in the financial statement due to fraud, we need to perform some inquiries with the management. Okay. Other than the management, we can also make inquiries with some other persons within the organization to understand the existence of suspicions of fraud. Okay. They may provide you useful information regarding the risk of material misstatement resulting from management fraud. Now, if you ask management, management might give you information about employee fraud. If you ask employee and other persons, they might give you about information about management fraud. So it's vice versa. Okay, so that's why it makes more sense that you ask other persons also, because if there is any fraud which is conducted by the management, if there is any suspicion on the management fraud, they can provide you. Okay, so those other people can include yeah. Those other persons can include operating personnel not directly involved in the financial reporting process, like the team which are involved into you can say marketing, sales, R&D, product quality, okay, production, HR, IT, like this way. Then employees with different level of authorities. For example, you may reach out to presidents, VP, okay, general managers. Also on the same time, you should reach out to executives, assistants, trainees. Okay, so reaching out employees with a different authority and level. Employees involved in initiating the process initiating, processing, or recording complex or unusual transactions. In-house legal counsel, chief ethics officer or equivalent person, person charged with dealing with the allegation of fraud. Okay, so these are the people who can guide you or who can provide you more information. Now, auditor can also inquire with the internal audit activity, internal audit also, because that will also provide you good information. So the auditor may inquire about specific internal audit activities, including procedure performed by the internal audit during the year to detect the fraud. Second, whether the management has satisfactorily responded to any findings resulting from those procedures. So you can, inquire with the internal audit plus other people to understand the fraud risk or any about the suspicion of the fraud. So why it is necessary? Because if you inquire with the management, auditor's inquiry of the management may provide useful information with respect to the employee fraud. But if you inquire with the others, okay, you will get useful information regarding management fraud. Okay, so that's why it's necessary to make inquiries with the others within the entity. Clear? So, operating personnel, employee with different levels, employee initiating complex transactions, in-house legal, chief ethics officer, person charged with dealing with allegation of fraud, for example, forensic team, okay, and then you can say with internal audit. Okay. Any doubt, guys? Any doubt? Okay. If no further doubts, let's then take a quick 10-minute break. And after the break, we'll gather back and continue the session. Okay. Let's take a quick 10-minute break. Ayashi? Ayashji?
Ayaji, Mr. Ayaz, Ajit, Ajit,
Hello everyone, welcome back. Okay, so now let us continue with this topic. Uh, let us see some more questions, and meanwhile, if you have doubts, please post it. I'll be taking it up. Okay, so there is one doubt with respect to the internal auditor's point. Okay, now in this question, there was a point with respect to the internal auditor. Like the auditor may inquire about specific internal audit activities, including procedure performed and management has satisfactorily responded to findings or not. So, see, when we are inquiring with internal audit, so what you need to inquire with the internal audit, that is also important. Now, when you inquire with the internal audit, you need to first, what we are inquiring is, what is the procedure that internal audit has performed in order to, understand that how they are detecting the fraud. Internal audit is also performing some procedures, okay, to identify and detect the fraud. So, what procedures they have performed with respect to this area? Number two, if they have identified any issues, if they have identified any frauds, if they have suspicion of fraud, how management has responded to their queries of the internal audit is also very important. So these are the two areas that we are required to inquire with the internal audit with respect to the fraud, identification and detection of the fraud. Clear? Any doubt? Okay. Let us take this one more question. Very good MCQ. While formulating the audit plan for the statutory audit of Jal Jeevan Limited, the audit manager explained to the team that the auditor is only required to test the appropriateness of the journal entry recorded in the journal ledger and other adjustment made in preparation of the financial statement where there is a high risk of management override of controls. Again, while formulating the audit plan for the statutory audit of Jal Jeevan Limited, the audit manager explained to the team that auditor is only required to test appropriateness of journal entries recorded in the journal ledger and other adjustment made in the preparation of financial statement when there is a high risk of management overrides of control. However, Mr. Sujoy, the engagement partner, has a different opinion. Kindly select the appropriate option from below with respect to the testing the appropriateness of the journal entry recorded in the journal ledger. And what are the options? Options are, irrespective of the auditor's assessment of the risk of management override of controls, the auditor shall design, perform audit procedures to test the appropriateness of journal entries recorded in the journal ledger and other adjustment made in the preparation of financial statement. So irrespective of the auditor's assessment, they need to test. Second, auditor is only required to test appropriateness of journal entries when there is a higher risk of management override of controls. Third, the only required to test the appropriateness of journal entries recorded in the journal ledger and other adjustment made in the preparation of financial statement when there is a proven history of the management override of control. Okay, the audit team is only required to test when there is a proven history. And fourth, the appropriateness of journal entries recorded in journal ledger and other adjustment made in the preparation of the financial statement is not dependent upon the risk assessment of risk related to management override of control. Rather, it is dependent on the risk of material misstatement due to fraud in revenue recognition. So, what is the correct option over here? So our question is, when there is a high risk of management override of control, at that point in time, we are only required to test the appropriateness of the journal entry. You need to select appropriate option, whether it is correct or not. If not, then what is correct? Come on, guys. What is correct? Okay. And why so, Namrita? I wanted the reason also. Okay, correct, Janvi. But again, I want also reason why you are selecting a appropriate a particular option. Good Shri Ram. Come on, guys, I'm waiting for your answer. Come on, I'm waiting for the further answers. So the question is, when there is a high risk of management override of control, okay, when there is a high risk of management of override of control at that particular point in time, only, I'm required to test the appropriateness of journal entries recorded in journal record. Otherwise, I'm not required to test. That is the question, whether this is appropriate or correct or not. If not, then what is the correct option? Good, Namrita. See, when we were discussing essay 240, I told you there are two things. Two risks which are presumed risk, means they are significant risk. One is a risk of management of override of control. Second was the risk of revenue, was the risk of material misstatement due to fraud and revenue recognition. Now, when I talked about the risk of management of override of control, it's a presumed risk. That is by default there is a significant or higher risk. And irrespective of my assessment on the management override of control standard, okay, SC 240 requires that irrespective of auditor's assessment, I should test the appropriateness of the journal entries, because I cannot avoid management override of control as a risk, because that's a presumed risk that is going to be there. Okay, so hence, irrespective of my assessment, whether there is a high risk or not, I am required to test the appropriateness of the journal entries. Okay, so option number B and C, they talk about, when there is a proven history or when there is a high risk. That is incorrect. I should test when by default. I should test by default or irrespective of the auditor's assessment. And the option number D talks about revenue recognition. So testing of journal entries is not related to the revenue recognition, but it's related to the management override of controls. Because that is an area that when management will exercise its override of controls, okay, its excessive power, they will manipulate the accounts by this way, by journal entries, not by revenue recognition. Revenue recognition is there. That's a high risk area already by default. There's a fraud risk area. But my journal entries, testing of appropriateness of journal entries related to the management override of controls. Clear? So hence, that is also incorrect. D. Not dependent upon the risk assessment or risk related to management override of control. That is incorrect. Hence, the correct option is A. Irrespective of my assessment as an auditor, I am required to test. Clear? Any doubt? Okay. In continuation to the same question, now in continuation to this question one, there is one more question. Okay. So you guys can understand in concept also. Also, kindly provide, in continuation to that, kindly provide the matter of relevance and the audit procedures the auditor shall design and perform to test the appropriateness of the journal entry recorded in the general ledger and other adjustments made in the preparation of financial statement. So what procedures you will design to test the appropriateness of the journal entries recorded in the journal ledger and other adjustments? So we understood, okay, irrespective of my assessment, our auditor's assessment, I'm required to test. Now, how will you test? That is the question over here. So in continuation to the previous question, you need to answer what procedures will you perform to test the appropriateness of the journal entries. Come on, guys. What procedures you will perform? When you are, let's say, for example, if you want to test the appropriateness of journal entries, what are the areas you will consider as an important areas? What steps you will perform, or what are the matters you will consider as a important matters while deciding the test that you need to perform? Okay, Namrata. Okay, good journey. Come on, guys. Correct, Namrata. Absolutely correct. Generally, if you are going to test a particular area, okay, what you will do? First, you will understand the area. You'll understand what are the controls which are there. You'll understand what is the complexity involved. Okay. So let us see the answer. So when we are required to decide the matter of relevance in the audit procedures, what we'll understand first? We'll perform the assessment of risk of material misstatement due to fraud. That is, we'll assess whether the fraud risk factors is present or not. Okay. Then we'll understand the controls that are being implemented over journal entries. What are the controls that are there? How much they are working appropriately, and accordingly I will decide my substantive testing. Okay, if my controls are operating effectively, then I will accordingly decide my substantive testing. Then entities financial reporting process and the nature of evidence that I can get from that particular process. Okay, let's say for example, if there are many journal entries which are routinely processed or which are recurring journal entries. Okay. Then in that case, I need to understand, okay, this is a recurring, I'll test one, I'll get the comfort on the others. I'll understand what is the combination on the manual or automated steps or procedures in calculation of those recurring journal entries. So I need to understand the process first. How many are recurring? How many are non-recurring? Okay. And if they are the recurring journal entries, how they are processed, whether there's a automatic procedures, manual procedures, automatic controls, manual controls, how much IT is used in the financial reporting process. Okay. So a lot of things I'll understand with respect to the financial reporting process. Then I'll identify certain critical journal entries with unique characteristics to test. For example, made to unrelated, unusual, seldom used accounts, made by individuals who typically do not make journal entries, recorded at the end of period or post closing entries without any explanation or descriptions, made either or before during preparation of financial statement that do not have account numbers, okay, containing round numbers or consistently ending numbers. Let's say for example, at the end of each financial period or each month end close, I see 50,000 rupees journal entry and with unusual account combinations. Let's say for example, I get a journal entry where sales is debited to my, instead of debtors, it is, let's say, either it is going to creditors, something like that, or unusual combination. Usually it is debtors to sales, but I'm saying sales is debited to creditors or something like that. Some combinations are used which are not appropriate. This could be to reduce the sale and to accordingly book the creditors or something like that. A combination is used, or vice versa. For this, I use a creditor to debit. I debit the creditor to sales, so I reduce the liability and increase my revenue to show my good books, something like that. And that is also at the each period end, 50,000 or something like that. Okay. Then nature and complexity of the accounts involved. Like, that complex journal entries or unusual journal entries contain significant estimates. I'll test those journal entries which contain significant estimates. I'll test, the journal entries which have not been reconciled on timely basis, or journal entries which are regarding unreconciled differences, okay, containing intercompany transactions associated with an identified risk of material misstatement due to fraud. So these are kind of journal entries I'll test. Okay. Journal entries which are outside the normal course of business, non-standard journal entries, I'll test those journal entries. And before testing or before designing the audit procedures for the journal entries, I'll make inquiries with the individuals involved in the financial reporting process for any unusual activity, to understand any inappropriate or unusual activity. I'll select journal entries and other adjustment based on the above criteria that we discussed. Okay. And I'll consider need to test journal entries and other adjustment throughout the period accordingly the evidence I'll guess from the testing. So once I'll test, I'll get some evidence whether I'll identify, okay, journal entries are appropriate, or I may identify issues and observation, and accordingly I will redesign and reevaluate my process of testing of journal entries. So this is how I can test, or I will design my procedures for the testing of journal entries. Clear? Any doubt? Any doubt? Okay. If no further doubt, then let me move to the next essay, that is essay 250. Okay, just a minute. Yeah. So essay 250 now talks about, before I jump onto the questions, I'll just give you a brief about essay 250. Now essay 250 talks about considerations of laws and regulations and an audit of financial statement. Okay. So essay 50 talks about what is required to be considered when we are considering laws and regulations in an audit of financial statement. When there are certain laws which are applicable, to an entity with respect to their operations, with respect to their financial statement, at that particular point in time, what are the things that an auditor is required to consider? Okay, so that is the important area with respect to this particular essay. Now, let us see quickly the objectives which are there for the auditor in this particular essay. So basically, the objective of the auditor is to obtain sufficient appropriate audit evidence regarding the compliance with laws and regulations. Okay, to perform specified audit procedures to identify instances of non-compliances having material effect, and to respond appropriately to identify non-compliance with suspected identified non-compliances or suspected non-compliances. Again, when I say I need to obtain sufficient and appropriate audit evidence, I need to understand, okay, which are the laws and responsibilities which are applicable, laws and regulations which are applicable to that entity, so that I can gather the appropriate audit evidence. I need to perform specified audit procedures to identify the non-compliance, and I need to respond appropriately to the identified non-compliance. Okay. So to do that, to meet these objectives, what I need to do is I need to understand the applicable laws and regulations. Okay. Then I need to obtain sufficient evidence by performing the test. So I need to obtain sufficient and appropriate audit evidence with respect to the compliance with laws and regulations that have a direct effect. So there are two types of laws and regulations, one which have a direct effect, one which have indirect effect. For the laws and regulations that have a direct effect, I need to obtain sufficient and appropriate audit evidence with respect to compliance with those laws and regulations. I need to perform audit procedures to identify instances of such non-compliances. I need to inquire and check the correspondence with the management and the regulatory authorities if there is any. I need to be remain alert, for the suspected non-compliances. I'll take, management representation or from representation from those charged with governance about known non-compliances. Okay. When, if I identify I suspect a non-compliance, what I need to do? I need to understand the nature and act of the circumstances or of the non-compliance. I need to evaluate the possible effect on the financial statement. I need to, discuss with the management and those charged with governance, or might need to take, legal advice. If I'm unable to obtain sufficient and appropriate information to evaluate the effect on the auditor's opinion, then I need to, evaluate the implication on the auditor's risk assessment, reliability of the management representation, and take appropriate action. Okay. So if I'm not able to understand, or if I'm not able to identify what is the risk on my opinion, then I need to, reevaluate everything. I'm required to communicate non-compliance through those charges governance. Okay. If non-compliance is intentional, material, I need to communicate immediately. If management or those charges governance, they are by default involved, or they are involved in that, then I need to communicate to the next higher level. It might be audit committee or supervisory board. If they are not available, if the highest committee or highest authority is involved, then I may need to seek a legal advice to whom I should communicate, whether there is a relevant legal authority I need to communicate. And accordingly, I need to assess the impact on my audit report. Okay, whether I need to issue a qualified or adverse opinion, whether I need to disclaim my opinion because I do not have any other information or information of the non-compliance, or I cannot ascertain the impact of non-compliance on my financial reporting or my opinion. Okay, or I may also require to report non-compliance to the regulatory authorities by law. So in this case, I need to understand what are the roles and responsibilities with respect to the reporting of non-compliance. Okay, that was a summary of SA 250. A quick summary. So this is a good question. Doubt with respect to the answering a question. So the question is, are we required to mention points as per the marks of the question, or we have to write all the points irrespective of the marks? See, when you are answering a question, okay, so you need to look into two things. One, what is asked in the question, the relevant areas. Okay. Second, yes, we are required to look at the marks, but the important and the main part will be what is asked in the question. Now, it can be there, that the answer or the thing which is asked in the question can be of 5 points, 6 points, 7 points. At that particular point in time, we need to write all the important things. It can be 5 points, 6 or 7, doesn't matter. But it depends upon what is asked. Okay, so if it asks that provide some examples, then yes, you can provide some examples according to the marks. But when it is asked a critical thing which requires 7 or 6 points, you need to mention all the points. So it depends upon the question, basically what is asked in the exam. If it is a case study, or if it is practical, where a scenario is given, you need to appropriately answer by putting all the provisions which are there in the scenario. Okay, correlating it and then concluding it, irrespective of the marks. I cannot say that, okay, the marks are less, that's why I'll write 2 provisions less, or I'll not correlate the things. Not an appropriate way in that case. Okay, any further doubts? Okay. Let us continue with the questions. I have one good question here. AMK and Company was appointed as a statutory auditor for Manpreet Aerotech Limited as a part of obtaining understanding of the entity and its environment in accordance with SA 315, and a part of obtaining a general understanding of the legal and regulatory framework, okay, applicable to the entity and the industry or the sector in which the entity operates. The audit manager was of the opinion that the inquiry of the management as to other laws and regulations that may have been expected to have fundamental impact on the operations of the entity will be sufficient and no other procedure is required to be performed. Okay, so what is the scenario is that like the audit manager was of the opinion that inquiry of the management to other laws and regulations, inquiry with the management with respect to the other laws and regulations, okay, that may have to that may be expected to have fundamental effects on the operation of entity will be sufficient. Okay, so inquiry will be sufficient with respect to other laws and regulations, and no other procedures is required to be performed in case of other laws and regulations. Okay, now the audit partner was not in consonance with the opinion of the audit manager, and he approached to the engagement quality control reviewer to understand the procedures the audit team can follow to obtain a general understanding of the legal and regulatory framework and how the entity complies with that framework. So you are required to guide the audit team with the examples of the procedures. Okay, you are required to guide the team with the examples of the procedures that audit team needs to perform to obtain general understanding of the legal and regulatory framework. So what procedures an entity or audit team needs to perform to obtain understanding of the legal and regulatory framework? So general understanding of the legal and regulatory framework and how the entity is complying with that. What you can need to provide some examples with respect to some procedures. Again, you need to provide examples, okay, of the procedures to obtain a general understanding. So how the team can obtain a general understanding of the legal and regulatory framework that is applicable to an entity, which laws and regulations are applicable to an entity, and how will you perform procedures to identify that, what procedures you will perform. Very important, guys. What procedures you will perform. Correct, Janvi? Come on, guys. So which procedures is it? What procedures are required to be performed? Okay, good, Namrata. Let us see the answer. Now, as a part of SA 315, okay, now what is SA 250? SA 250 talks about application of a understanding the laws and regulations, okay, considering the laws and regulations in an audit of financial statement, okay. Now, what is the SA 315 talks about? 315, I'm talking about. 315 talks about understanding the entity. And when I want to understand the entity, I need to also understand the legal and regulatory framework applicable to an entity. Okay. So, as per SA 315, auditor is required to obtain a general understanding of legal and regulatory framework applicable to the entity. Okay. And how the entity is complying with that framework. And in order to obtain general understanding of the legal and regulatory framework, what I need to do? I need to first understand the entity's industry, regulatory and other external factors. For example, whether it's the banking industry, whether it's the power sector, whether it's the oil and gas, whether it's insurance company, which industry it is. Okay. So I need to first understand the industry. It could be, as I said, banking, NBFC, it could be insurance, oil and gas, telecommunication, pharma, manufacturing, a lot of industries can be there. Then I need to understand that update the understanding of those laws and regulations that have a direct determination of the reported amount of the disclosure in the financial statement. Means laws and regulations that are having direct impact on my reported amounts, or that directly determine the reported amounts. And which laws and regulations can be, let's say, for example, Companies Act, Banking Regulation Act, okay, or you can say SEBI regulations, etc. So these are the laws and regulations that will have a direct impact on the reported amounts in a financial statement. Then I need to inquire with the management as to other laws and regulations that may be expected to have a fundamental effect. Now, as I told you, there are two laws and regulations, two types. One that have a direct effect, one there are the other ones. Other ones may not be having a direct effect on the financial amounts or the reported amounts. Okay. Let's say, for example, environmental laws. They will not have direct impact on the reported amounts or the disclosure of financial statement. But their compliance is necessary to to run the business, or their compliance is a fundamental to the operation of the company. Okay, so they can be called as in other laws and regulations that may be expected to have a fundamental effect on the operations of the entity. So I need to understand which laws and regulations are these, like environmental laws, pollution control, or operating license, manufacturing license, mining licenses, something like that. Okay, if it is involved in the mining, then mining laws. Then let's say, for example, if it's in defense related, some defense specific laws can be there. Okay. Then if it is in the pharma, again, in pharma, I have specific pharma laws with respect to procuring certain items which are prohibited under certain acts. Okay. So there are sensitive items, there are sensitive ingredients which are prohibited. Or let's say, for example, if I'm operating a nuclear power plant, okay, then there are certain laws and regulations with respect to the safety. If I'm operating a power industry, there are safety regulations which are applicable. There are a lot of many different laws which are applicable with respect to the operations of the entity. Okay, in that case, they have a fundamental effect. These are the other laws and regulations. They do not impact my amounts, in the financial statement, but they have an impact on my operations. Then I need to inquire with the management concerning the entity's policies and procedures regarding compliance with laws and regulations. What is the entity's policies or procedure to ensure compliance? Then I'll inquire with the management regarding the policy and procedure adopted for identifying, evaluating, accounting, and for litigation claims. Okay. So if there are any litigation claims, then what is the policy and procedure that management has adopted for identifying, evaluating, and accounting litigation claims? Clear? So these are something, general procedures. These are the procedures to obtain a general understanding of legal and regulatory framework in an entity. Any doubt? Any doubt? Okay. If no further doubts, let me take one more question, very important one. It's an MCQ. Okay. Will help us to understand the concepts in detail. Sorry, just a minute. There is some problem with the screen. Sorry, just a minute. There is some technical issue. Okay. Yeah. Sorry for the technical issue. Okay. Now, as per Mr. Lakshman, one of the directors of the directors and chief financial officer of India Aerotech Limited. Okay. The auditor is responsible for identification of all non-compliances with the laws and regulations applicable to the organization. They should detect all non-compliances of laws and regulations while performing their audit. As per SA 250, what will be your opinion as an engagement partner on the engagement team of this? So options are, yes, auditor is responsible for identification and detection of all the non-compliances of laws and regulations. As per SA 250, the auditor is only responsible for identification of non-compliance of laws and regulations whichever directly applicable to the entity in preparation and presentation of general purpose financial statement. The auditor is not responsible for preventing non-compliance and cannot be expected to detect non-compliance with all laws and regulations. Owing to the inherent limitations of an audit, there is an unavoidable risk that some material misstatement relating to the non-compliance with laws and regulations in the financial statement may not be detected. The concept of reasonable assurance is not applicable to the laws and regulations, and hence auditor is not at all required to investigate the applicability of the compliance with laws and regulations. So what could be the correct answer in your as per your opinion? Come on, guys. So with respect to the laws and non-compliances, what is the responsibility of an auditor? Identification of all the non-compliances or identification of the non-compliances with laws and regulations which have a direct applicable to the financial to the entity in the preparation of the financial statement, means they have a direct impact to the reported amounts, or it is not applicable. Come on, guys. Come on, guys. I'm waiting for your answer. Come on, guys. I'm waiting for your answer. You need to select appropriate option and you need to uh, specifically look into like whether it is required or it's not. Okay, good Namrata, good Janvi. I want the reason also. Like why you are selecting that particular option. Why that particular option? Why you have selected that particular option is also important to understand because that will enhance your concept. I can choose one answer, but why that answer? That is very important. Come on, guys, I'm waiting for your answer. So you need to choose whether it is required by the auditor to identify and detect all the non-compliances, or I just need to identify and detect non-compliance with respect to the laws and regulations that have a direct impact. Which non-compliance I'm required to look into. And what is the, if you are selecting any option, and answer should be why you are selecting that option. The reason should be that also. Like you need to provide the reason. Come on, guys. Okay. So let us see the answer now. No. Let us see the answer now. See, when we are discussing the non-compliance, okay, when we are discussing the non-compliance, what is the objective of SA 250? Is the objective of SA 250 to identify all the non-compliances, So we need to understand what is the objective of SA 250 that we are referring over here. Okay. When you talk about SA 250, SA 250 talks about what is the responsibility of the auditor. So SA 250 requires that the requirement under the SA 250 are to design and assist the auditor in identifying material misstatement due to non-compliance. Okay. Auditor is not expected or is not responsible for preventing the non-compliance. So auditor is responsible for identifying the material misstatement in the financial statement due to non-compliance. Okay, but it's not responsible for preventing non-compliance or cannot be expected to detect the non-compliance with all the laws and regulations. So my role is not to identify the non-compliance. My role is to identify the misstatement due to non-compliance. There's a big difference between both. As an auditor, my role is to obtain reasonable assurance that the financial statement taken as a whole are free from misstatement, whether caused by fraud or error. Okay. So in that case, when I say fraud and error, that could be misstatement could be due to non-compliance with the applicable legal and regulatory framework. And hence, it's not the role of auditor to identify and detect the non-compliance. It's the role of the management or with role of those charged with governance to ensure that the entity's operations are conducted in accordance with the provisions of laws and regulations that are applicable to that particular entity. As in management or those charged with governance, it's their responsibility. So then the option 1 or option 2 talks about the auditor responsibility. That is incorrect. Auditor is not responsible for identification and detection of all the non-compliances. That's the responsibility of management. Even in the second, auditor is responsible for identification of non-compliance of laws and regulations which are directly applicable. No, not even directly applicable. My role is to identify misstatement. So the third one, which talks about auditor is not responsible, that is correct. And the fourth one, the concept of reasonable assurance is not applicable to laws and regulations. That is again incorrect. The correct option is 3. Clear? Any doubts? Okay. Let us see some more questions. Okay. One very good question. Now this question is related to again non-compliance only, laws and regulations, but it talks about how it is looked into. Mr. Akash, one of the audit team members, okay, while performing the statutory audit of Anand Plasto Limited, identified some unusual and large payment of 10.5 crores to a legal and retainership fees. Upon inquiry with the management responded that the large payment to the legal fees were in line with the amount charged by the other legal counsels in the market and similar to the last year's payment. Upon further analysis, Mr. Akash identified that the last year payment made to legal and retainership was only 75 lakh. So see the comparison. Current year, the payments of 10.5 crore were made, but last year it was only 75 lakhs. And management was saying that it is, management responded that it is in line with the amount charged by the other legal counsels and similar to the last year payments. Also, in the market, the amount charged by the experienced legal counsel on a retainership basis, based on the same arrangement as the company is having, is 60 lakhs to 1.2 CR per year. 1.2 CR per year. So it is not also in line with the market. Not also in the line with the market. Now, when Mr. Akash presented these facts to his audit manager, then the manager requested Mr. Akash to look into other situations that may be an indication of non-compliance with laws and regulations. Mr. Akash has approached you to understand what could be those other factors or situations that may be an indication of non-compliance with laws and regulations. Kindly guide Mr. Akash with respect to the factors. Okay, kindly guide Mr. Akash with respect to the factors or situations that may be an indication to the non-compliance with laws and regulations. So you need to guide Mr. Akash with respect to certain factors, okay, that can be an indication of non-compliance, like this way: unusual or large payment to the retainership or legal fees. If you see unusual large payments, means there is an indication of a non-compliance. Otherwise, why would you pay to a legal? Same way, there could be some other areas, other factors, situations, indications, which could lead to, okay, there can be a suspected non-compliance. And which are those factors, situation? You need to provide the example. Think about it. Okay, you have seen certain examples, certain transactions, which could generate some suspicion about your this could be some non-compliance. This could be because of some non-compliance. For example, receiving notices from the department. You have received some inquiry notice from the department. As of now, there might not be much information available, but that could lead to a suspicion. Okay, there could be a non-compliance. In that way, what could be some other examples? Come on, guys. Absolutely correct, Jan. Wonderful. Come on, guys. What could be some situations like this which can lead you to believe, or which can raise suspicion about, okay, there could be a non-compliance with a law or regulation? Absolutely correct, Janvi. Yes. Let us see some examples and answer here. So, certain of the examples, like, which could be, which could lead to understand, situations like non-compliances. For example, investigation by regulatory organizations that could, raise a suspicion why the investigation is going on. Payment of fines or penalties. you see payment of fine or penalties in your profit and loss account, then why the penalties paid? Why the fines were paid? Means there could be some non-compliance. Payment of unspecified services or loans to consultant, related party, government employees. Sales commission to agency that appear excessive in relation to those ordinarily paid. Purchasing at price significant above or below the market price. Unusual payment in cash, purchases in form of cashier checks, payable to bearer or transfer of the number bank account. Unusual payment towards legal and retainership fee. Unusual transactions with companies registered in tax havens. Payment for goods or service made other than to the country from which the goods or service originated. Payment without proper exchange control documentation. Existence of an information system which fails, whether by design or accident, to provide adequate audit trail of sufficient evidence. Unauthorized transactions. Adverse media comments. These could be some areas which could, lead to suspicion of a non-compliance or indication of a non-compliance with laws and regulations. In continuation to that question only, like he identified high retainership fee, Mr. Akash identified high large payments. In continuation to that, I have another question, okay, like a case study. So Mr. Akash identified large payment for the legal and retainership fees that were pertaining to litigation where the company's Thirunelli manufacturing plant was declared illegally constructed on a forest land reserved for the elephant corridor. As per the notice received by the company, the management was required to decommission the said manufacturing plant within 2 years from the date of notice. That the date of notice was 31/5/2021. So 2 years from that will be 31st. Let's assume that 30th March or 30th May 2023. So as on 31st March 2023, just 2 months are remaining. The company was still challenging the decommissioning order in the High Court. And as per the assessment carried out by the audit's legal team expert, there were remote chances for getting a stay on decommissioning order. So there was a remote chances. The company has 3 plants across India, and the Trinity manufacturing plant is responsible for more than 75% of the annual production. The team assessed that the decommissioning of the plant would disrupt the production and operations of the company. To an extent, it might go bankrupt. In the financial statement prepared for FY23, the company did not disclose anything pertaining to this litigation. Now, when Mr. Akash sought guidance from the audit manager suggested that no disclosure or action is required from the side of auditors and the matter is pending in the High Court. Mr. Akash, being not satisfied with the response received from the audit manager, has approached you to understand what he should do as an auditor. You need to guide Mr. Akash. Now, there are 2 essays, very important essay, which comes into this whole play. And I want you to answer what you would do as an auditor. You identified the litigation. Okay. You have identified you identified the litigation which has a huge impact if this get materialized. So for example, here the company was still challenging decommissioning order, but audit team's legal expert assessed that there were remote chances of getting stay on decommissioning order. Manufacturing plant was responsible for 75% of annual production. And there were chances that they are going to decommission it because there was less chances on the stay order. Company does not disclose anything pertaining to this litigation. Now you tell me, first of all, as an auditor, if this is the case, company has not disclosed anything pertaining to this litigation in the financial statement, what will be your responsibility with respect to the disclosure? Where you will disclose? How you will disclose? Very important. How you will disclose this? There are two important essays which comes into this picture. As an auditor, what actions you will take, how you will disclose this, or what steps you will take to ensure you have an appropriate reporting on this or expression of opinion on this. Good, Jani. Good. Come on, guys. How you will report this matter in the audit report. Let's say you are preparing the audit report now. How will you report this matter? Where you will report this matter? I'm waiting for the answer, guys. Come on. Very important question, and there are two essays which are important here, which are applicable, and which are those I want also name. Name those essays which comes into the play in this question, and how will you report the same matter? Okay, so there are two things with respect to this. Number one, when I talk about a issue, a non-compliance, okay, that is there with respect to the law, there is a non-compliance with respect to the laws and regulations. Okay. Now, when I talk about a non-compliance, I need to understand that what is the impact of this non-compliance and how the management had disclosed this non-compliance. So that is very important to understand. So I need to understand the impact of this non-compliance. First of all, here in this particular case, the impact of the non-compliance is so much that it is impacting, you can say, the preparation, the going concern assumption or going concern basis used by the management. Okay, here the management use of going concern assumption is not appropriate. First of all, reason because here the amount of the operations that are dependent to that manufacturing plant is 75%, enormous. Okay, if the plant goes down, the operations goes down, and accordingly it will be an issue for the management. Now, SA 250, which talks about the understanding the laws and regulations and consideration of laws and regulations in audit of financial statement, it requires what is required to be done when a non-compliance is identified and how you need to report the non-compliances. Okay, so SA 250 says that if the auditor concludes that the non-compliance has a material effect on the financial statement and they are not adequately reflected in the financial statement, the auditor shall, in accordance with SA 705, express a qualified opinion or adverse opinion on the financial statement. Now here the non-compliance is material and pervasive both. If you refer to SA 705, okay, SA 705 says if the misstatement is material plus pervasive both, then you need to issue adverse opinion. Here it will be both because it was of so nature that is material by default 75% of the annual production, and pervasive because it is impacting other areas also, not only the production, but it will impact my sales, it will impact my operations, it will impact the overall financial position of the company. Hence, I need to issue an adverse opinion based on SA 705 plus SA 250. Okay. Another thing is I'm required to communicate this non-compliance to those charged with governance. So SA 250 plus SA 260 requires communicating matters to those charged with governance, and I'm required to communicate this matter to those charged with governance. Okay, so first I'm required to report as an adverse opinion. Number two, I'm required to communicate to those charged with governance. Okay, because these are of such nature which are important. Okay, then third is reporting as per SA 250, SA 570. Because the use of going concern basis of accounting is inappropriate. The use of going concern basis of accounting by management is inappropriate. Okay, the preparation of the financial statement on the going concern basis are not correct, because here there is an issue on the going concern, plus there is no appropriate disclosure of this issue, okay, of the material uncertainty that is existing. In that case, the use of the going concern basis is inappropriate, and I need to report appropriately in my going concern paragraph in the audit report. I need to report appropriately in the going concern paragraph on my audit report about this particular matter. I hope I'm clear. So not only SA 250 is important here, SA 705 because which opinion you will issue, SA 260 because you need to communicate with those charged with governance, plus SA 570 because the use of going concern basis of accounting is inappropriate. So there are 1, 2, 3, 4 SAs which are very important and coming into play together. Now, there is some answer with respect to should we report this matter into EOM paragraph. See, if you read the requirement for SA 706, okay, if you read the requirement of SA 706 about the EOM paragraph, now it is specifically said that it's not a substitute. Okay, it's not a substitute for the modification. It's not a substitute for the 701. Okay, and it's not a substitute where modification is required. So I cannot use emphasis of matter paragraph where there is a modification. So I can only use emphasis of matter paragraph where there is no required to modify the opinion. It's not a key audit matter. Okay. And where in auditor's report, where the matter is already appropriately disclosed in the financial statement. So matter is appropriately disclosed in the financial statement, but in my judgment, it is important and that is fundamental to the user understanding to bring attention of that particular matter. Okay, so I'll provide a reference of the financial statement. Okay, this is a matter which is disclosed in the financial statement, and this requires a bit of attention, and it's fundamental to the user understanding. Okay, that is emphasis of matter paragraph. I hope I'm clear, and that's why it will not be reported in EOM paragraph. Any doubt? Any doubt, guys? It should not be included in the EOM paragraph. It should not be, because it's a reason for the modification, or rather adverse opinion. It is required to be reported in the going concern paragraph plus basis for adverse opinion. Okay. Guys, I want feedback from your side, whether you are liking the lectures, what changes you need, or what further you need. I want a feedback from your side because I want to understand whether it's helping you out or not. Trust me, that feedback will really help me, whether you are liking it, whether it's helping you out in solving the questions, in answering the questions, and whether it's, helping you in your preparation or not. So please provide your feedback. That's very important. Okay. There are few questions left for SA 200 series, not much, but few questions left. I'll try to cover quickly in the next lecture, in first half an hour or so. Okay, so that we can proceed with the SA 300 series. That is a very important series. Okay, please be ready with the lectures. You go through the lectures of SA 300 series in the next lecture. You go through the study material. Okay, the notes which are available on the BOS portal. Even the previous notes have been already, I have uploaded the previous note, and after today's lecture, I will be uploading the SA 200 series questions also. So be ready with the questions and your doubts. Watch the lectures well in advance so that when I'm discussing the SA 300 series in the next lecture, questions of SA 300 series in the next lecture, you are able to answer it, or you are able to, understand what we are discussing. Okay. If no further doubts, then guys, I propose to close the session and end the session over here. Thank you. Thank you for your time. I'll see you in the next lecture.